Did you know that many investors lose money not because the market is bad, but because they make mistakes that could easily be avoided? Today, we are going to talk about the 5 most common mistakes investors make. According to none other than Warren Buffett, one of the richest and smartest investors in the world. And I promise, if you avoid these mistakes, your chances of success go up a lot. The first mistake is trying to time the market. Yes, you heard that right. Trying to buy low and sell high sounds obvious, but it's almost impossible to get it right all the time. Even the most experienced professionals fail at this. Buffett says many investors lose money because they trade too much, buying and selling, trying to predict market movements. Instead, he recommends investing in solid companies and letting them grow over the long term. Think of it like a tree. You can't rush it to grow faster. Patience is key. The second mistake is following the herd. This means buying stocks just because everyone else is doing it. For example, imagine suddenly everyone is buying the same cryptocurrency or a popular tech stock. The hype can cloud your judgment, and often the price rises too fast and then drops just as quickly. Buffett advises analyzing the company and its fundamentals, not just the trend of the moment. Ask yourself, does this investment make sense for me, or am I just following the crowd? The third mistake is investing outside your circle of competence. Buffett always emphasizes knowing your limits. Only invest in what you understand. For example, if you know nothing about biotechnology, don't buy biotech stocks just because someone said it's going to explode. Understand the business, how it makes money, and what the risks are. When you invest in what you understand, you make smarter decisions and reduce unpleasant surprises. The fourth mistake is not recognizing and correcting your mistakes in time. Everyone makes mistakes, even Buffett. The problem is that many investors refuse to admit they are wrong and hold onto losing investments, hoping they'll recover. This can lead to bigger losses. The key is to be honest with yourself and act quickly. If an investment doesn't make sense or the risk is too high, adjust your strategy before it's too late. The fifth mistake is impatience. In investing, patience isn't just a virtue, it's a strategy. Buffett built his fortune with a long term approach. Buy solid companies, hold them, and let their value grow over time. Many investors want quick results and get frustrated when they don't see immediate gains, selling at the wrong time. Remember, successful investing is more like growing a garden than winning a sprint. Now, let's talk about how to apply this in practice. First, choose companies or assets you truly understand. Do your homework, read reports, analyze earnings, and understand the business model. Second, avoid being swayed by the crowd. Be critical, compare information, and trust your own analysis, not what everyone is saying on social media or news. Third, define your goals. Are you looking for long term growth, passive income, or simply diversifying your portfolio? By keeping these 5 lessons in mind, you'll start making smarter decisions and avoid the common pitfalls that trap so many investors. Investing isn't about luck, it's about discipline, knowledge, and long term thinking. Warren Buffett's advice might sound simple, but applying it consistently can make all the difference. So, take these lessons seriously and let them guide your investing journey. That's it for today's video. Thanks for watching, and we'll see you in the next one.